Okay, in this disc, I'm going to take a more informal tact with the coursework. The first couple of discs outlined, more of the theory, more of just the information you've got to absorb. And what I want to do on this disc is give you a bunch of different examples using different techniques to analyze the market to help you really get an idea of what you're trying to look for here and what I'm trying to convey. Now, as I said in past videos, this isn't stuff that I made up. I learned this stuff reading Wyckoff's book, other books throughout the years. This is something that's funny about the markets. It seems like most of the real work was done in bygone days when men and women who wanted to trade the markets had to do everything by hand. And I think that's for a very specific reason. I think that what happened was they assimilated a lot of information on many different levels, the actual physical or visceral level, as well as the visual and mental level. So they just had a better understanding of what prices did. I think that we're also looking at that, innovation stopping, if I may make a little bit of a commentary here, with at least American public education, it's sadly lacking because kids are no longer taught how to think. They're not taught how to discover. They're simply taught out of a book. Here's the theory. Go forth and make great discoveries as long as it lines up with our theories. So in the same way in the markets, you want to learn the basics, the theories. You want to learn from other people, but you've got to resist the urge to be lazy. You've got to resist the urge to just go by what you hear and do some work. Get in here and dig this stuff out. But I also know that most people either don't want to do that or just won't be able to do that for various reasons. So I want to give you some of the work done for you already. Now, the first thing that we're looking at here is a pivot point analysis. You can see here, there's the second resistance, first resistance, the high, the low, here's the pivot point, and now we have first support and second support. Now, all of these price levels they're going to work in the same fashion that price levels have always worked. But now what we're going to do is combine that with this volume or activity analysis. Now, the first thing we've got to look for here is just where are we at as far as trading, and we can see that we're at a high, both on the daily and on the weekly. Now, you can see that the weekly is forming what it amounts to a double top. Here's the prior top here, and we're right back at it. So on a long-term basis, we're at a top, meaning we're at a new high. And even on a, I guess you'd call it a midterm basis, we're at a new high. And also when we zoom in and we look at even just the last couple of days, we're at a new high. So we're at new highs. So remember, by the theory that I put forward is you're going to see weakness come into the market at new highs. And you're going to see strength come into the market at new lows. So as this market starts to run up here, we've got to acknowledge the resistance areas first of all, and then let's examine some of the internals here. First of all, you can see that this market got up to that high, let's see, 1, 2, 3, 4, 5, between 5 and 6 hours ago. In fact, the high today was really more of a spike on this one bar. So the market spiked up here and started to come down. Well, what do we see? Look at this. Look at this spike in volume. Now let's go ahead and zoom out and see, does this spike in volume qualify as high volume? Well, let's take a look. Let's just draw a line across.